You have to remember that this prism could be temporary. Today, the market had a jaundiced view of just about everything. Yesterday, we were a lot more positive. Tomorrow, nobody knows, but I suspect the market is still in fault-finding mode. Here's what we do know. We got a bunch of very important quarters after the close today, and every single one of them is considered horrendous. Every one. Does that make sense to you? I told you to expect incredible things from Alphabet, the parent of Google, thanks to the boom in online advertising, as all sorts of travel and leisure outfits spend money again. Well, sure enough, Alphabet shot the lights out. They earned $27 per share. Street was looking for $19. Sales $5.6 billion higher than expected. Advertising on fire. Google Cloud on fire. But wait a second. If the CDC's right, no one's going to travel. Sell Alphabet. Next up, Starbucks delivered a terrific set of numbers with a very encouraging same-store sales forecast for the next quarter. However, the stock initially got hit after hours because the bar had been raised. And who's going to go out and buy a cup of coffee if the CDC says all hell's about to break loose? So people nitpick and sell the news. We saw something similar from Microsoft. They beat the numbers with an excellent quarter across the board. Yet the stock rolled over in after-hours action because it had run up substantially over the past couple of months. There, I have to believe that one. Nobody feels like a hero in tech stocks after today's beatdown. So that one, even though my trust owns it, is not my fave. Advanced Micro, it shows you that Intel's problems might be the result of company-specific ineptitude rather than industry-wide issues. But the CDC says sell AMD. Like, the CDC is a big brokerage house. Finally, Apple knocked it out of the park tonight with a record quarter. Remember all those analysts who told you to worry about their channel checks showing weak component orders? As usual, they were dead wrong. Apple posted 29-cent earnings beat off a $1.01 basis, much higher than expected sales. In fact, they were firing at all cylinders. Every major line item was better, especially phones and wearables. Chinese business up 58%. I was worried about a crackdown. Once again, this is why you own Apple, don't trade it. So why is it down, and why will it be down big tomorrow? Because they said that maybe the next quarter won't be as good as this one. Who can blame them? It was a record quarter. But you have to understand, the prism takes that stuff seriously. Sure, many of these stocks did trade down after the close, and they will trade down again tomorrow, okay? But that's all about the negative prism and not a true reflection of what are some really amazing businesses whose stocks will certainly be thrown away for tomorrow and maybe even the next day before you can buy them. The bottom line, please don't take your cue from the day-to-day action, because that just tells you you're using the filter that we're all using instead of doing your own homework and making your own judgments, as a lot of the trash that was thrown away today and tonight might just turn out to be the market's treasure once we reach herd immunity, CDC, and we will reach herd immunity sooner than Wall Street expects. We just might not like how we get there.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.